Hi everyone, Katie Lockwood with Meridian Wealth Management here. Today is Friday, January 29th, 2021. I hope you're having a wonderful day, getting ready to head into a great weekend. And I wanted to post this video today to talk about some of the wild trading that we saw this week in the stock market and ultimately debunk this idea that the stock market is rigged against the little guy. To bring everyone up to speed, it all started with a forum on Reddit called Wall Street Bets. They noticed that hedge fund companies, which are large Wall Street firms, were taking rather big positions, short positions into certain companies. Shorting a position or shorting a stock means that you sell a stock today at a high price in hopes that tomorrow you can buy it back or close out the position at a lower price, ultimately realizing a profit. But it will work against you if in fact the stock does not go down in price, but it goes up. So the people on the forum took action and they went in and they began to buy the stock. The stock prices were going up. Most notably was GameStop, which was up 1,700% since December. And then this forced these hedge fund companies to buy back the stock at a much higher price, realizing losses. And some of them now are going to have to claim bankruptcy. Now, originally this was being seen as a David beats Goliath type of story. And I even saw on social media where some were saying that they were sticking it to the man. However, Wall Street responded. Most notably, the trading platform Robinhood turned off trading to some of these stocks, and therefore the little guy, the everyday retail investor, was not able to participate in the buying and selling of these stocks on certain dates. Now, rightfully so, there is a debate going on whether this activity was in fact right or wrong. But I don't want this to discourage anybody by saying investing is completely rigged and it is just not for me. One thing to remember when you're investing is that you're not going to be shorting the stocks, most likely. No investors that I know, nor any of my clients, are shorting any stock. Rather, we're buying for the long term. Also, don't forget about the benefits of diversification. This happened on just a select few stocks, and it's such a rare instance that this is the first time that we're really even hearing about it. If you look at the history of the broad stock market, the S&P 500, you'll notice that the S&P 500 more likely than not is going to yield you a positive return. In fact, if we go back to 1926 all the way through 2018, if we look at a rolling 20-year period, 100% of the time the market would have yielded you positive returns. If you shorten that time frame down to just 5 years, then over 87% of that time it would have yielded you positive returns. So I don't want anyone to lose faith in the idea of the stock market being able to bring you financial freedom, but don't take serious bets like we saw in the market this past week. And if you think you need help, don't hesitate to reach out to a professional to ask for some advice. Because truly, if you want some financial freedom, you need to own and you need to invest, but you need to make sure that it is in fact suitable for you. Feel free to contact me if you wanted to discuss more, or if you just wanted a second opinion on what you're investing in right now, or if you just don't know where to get started. I'm more than happy to help wherever I can. So I hope this clears up some confusion, gives you a little bit more faith in the market, and don't hesitate to reach out to me if I could be of further assistance. Everyone, I hope that you have a very wonderful weekend.